Hey everyone, welcome to your daily update for SOL and BTC. Um, yeah, a bit of a roller coaster weekend. So we've had one of the biggest flushes that crypto's ever seen, um, and I've put some stuff up on X about why I think, well, not so much the why, but how that could happen, and certainly after really thinking about it, it's and seeing a few sort of thought-provoking tweets, etc. Yeah, it kind of makes sense. The levels that we hit were all levels that were outstanding, and things like 15-day shorts, etc., that have been in play for a really long time, and it's kind of hard to believe that TA would tell you, that this is where the price is going to go, and then this is where it's going to go. Personally, I feel a little bit embarrassed by the fact that I wasn't watching things like 4-week charts on a daily basis, and if you had been, you would have seen that it hit a level and went to a level, and um, how that actually ties in with the perfect storm of um, low liquidity and macro uncertainty and market makers de-risking, and a couple of players basically just pushing Bitcoin off a cliff and then sending everything down with it. And the way the accounts were all structured these days, with people using spot collateral and unified accounts, well, then all that spot gets sold on the market, and there's no buyers for it because a lot of it's sort of not exactly popular tokens. And then the next thing you know, they're going to zero on exchanges, and yeah, it was a pretty crazy event. But the aftermath of it, it's all very explainable. And I think the one bullish thing to take out of it is that someone bought it, and if someone did buy it, the question then becomes, do they want to take it up, and from that point, where do they want to take these profits? So, I guess that's what we're going to look at today. Is what is the structure actually telling us? So, we're from a 1-day liquidity perspective, you would basically say we're going to have another sweep. And there's a couple of timeframes that will hard close today, and those timeframes may go back to sort of that 108 retest on BTC. And but I think the real tell is, where do they close? Because it's one thing to close above support levels and then have a retest of some kind of hard close level. That's bullish. It's another thing to close below support levels and then have a retest of something lower, because that just leaves, once again, uncertainty as to whether or not the price is going to be able to get back up beyond that support, which effectively would be resistance if you start closing below it. So yeah, so as it stands on the 1-day, you'd sort of say, okay, well, we might get a revisit of 108, something along those lines. For SOL, what does that mean? Well, should have prepared that. It's taken nearly 2 hours to prepare these charts today. There was a lot to look at. So what does that mean for SOL? Well, it did not take long for SOL to get very, very bullish on the 1-day. Everyone bought that sort of 170 level, and as you can see, it's pushed up quite quickly. Doesn't mean it can't go down and do one of those retests. So when we're looking at these charts, we'll check to see, is there a reason they could go back to 170? Is there a reason they could go back to 180? Or is it just going to be up from here? So that's what we're looking at on the 1-day. On the 7-day, you could see that pushing SOL up but pushing SOL down would actually, pushing BTC up, pushing SOL down would actually make a bit of sense, even though that makes no sense. But we have seen that happen before. And on the 30-day, basically it would say, well, it's now decision time. Do you leave this 107, 108 area behind on BTC, and do you just push up and let's go visit that 124 resistance and see whether we can overcome that, and then do we go to 130s and our blow off top and basically end the cycle. Now with SOL, that's basically saying, do we go and revisit the 170 to 180, or do we just push all the way through to the 250s and blow off top and end of cycle? So yeah, it's pretty hard to say exactly what will happen, but markets, traditional markets will reopen on Monday. The question is, do they then have some kind of flush or another tweet or whatever that comes out? Because like I've joked before a lot about, Trump tweets and Trump TA and all that kind of stuff, but this particular weekend was quite literally the perfect time tweet on a Friday, the perfect time recovery on a Sunday, and the perfect time full stop, or the perfect week to be doing it based on open interest and continuous bull posting and all of that stuff that we were sort of warning about over the last couple of weeks. When you've got people just screaming the cycle never ends, super cycle, and everybody just starts longing on leverage, and then one tweet, there's your excuse. And it's not to say that that tweet sends the market down, but it causes market makers to thin the books. And then if there is a whale out there, and they probably only need a couple of $100 million to really do this, they can crash the market, because there's just the way these things can cascade when everything is too overhyped and too frothy is just super easy. So all right, if we look at it from the other direction, so you can definitely see that BTC's run into that sort of 115 area. It could keep pushing up. There's absolutely no reason why not. In fact, we kind of want it to, just to close higher. But you can also see that everyone who's chased these longs or chased this pump, they're down to that sort of 106 area, and you got that 100x leverage sort of sitting down to the 110. So, do they leave it behind? It might be the one time in the cycle that they do. But at the same time, you got to be prepared. You can't be having a position open with really stupid leverage with your stop losses or liquidations sitting in this area, or you probably too many people do it. It'll happen. It'll flush it. And SOL has just taken off to the upside. So I think there's just such a big gap here to get up to that next sort of bracket, but as you can see, the alerts are going off. It's just pushing up through these levels. So once again, it may happen. The daily origin rejection was somewhere around 197. Now, we could keep pushing up like this for the next 4 hours, but then start to, or actually however many hours we got now, and then start to pull down prior to daily close. So that is still possible that it flips bearish from this point. But how they close today on all these multi-day timeframes is really going to tell a story as to whether this was just the world's biggest rug pull, epic flush, money taken from everywhere. I mean, it was spot collateral, it was exchange, liquidation insurance funds. It was, basically, ADL kicked in and started to close profitable positions. So there is more money actually, and I guess this is the key thing. There's actually more money available now for people to trade than what there was before. Now it's in different hands, because some people lost and some people gained out of it, but some of that money that was transferred comes from areas outside of just futures peer-to-peer traders. So it's like dipping into the fund or bank account that the exchange had for emergencies, and that's now gone to people. And it's like dipping into all of those old spot assets sitting in unified accounts and cross collateral accounts and things that exist, and that's now gone to traders to trade with. So you've actually just basically taken from certain areas. That means there's actually more money available for people to trade now. It's just a question of and let's see what happens. Okay, let's have a look at these charts. Okay, so SOLBTC Strength on the daily, it's bounced off. Let's see, what has it bounced off? So it hit a break. Yeah, whatever it's bounced off probably isn't on the daily, but it has hit a break level. It's bounced back up, created a interior trend. So pretty much what the key reason I was saying like long 173, and in yesterday's video we talked about how the daily trend on SOL, and there was a few other tokens I think we talked about in the Discord, etc. But basically what was happening was the daily trend was shifting, and it's easier to move a daily trend from the top side to the bottom side and then use it as support than it is to try and break it by getting back up over it. So what basically happened yesterday was we shifted that trend. The interesting thing is it didn't really, like in this case, it looks like the trend might have shifted the day prior. The strength then created an interior trend, and then we've bounced off the interior trend and the break level to travel back up. So the target for this is going to be somewhere back up into this area up here at about 179.70. It's going to create potentially this hold level. So this is all, obviously quite a bullish outlook. It could change in the next 3 hours, so just bear that in mind. But if we do get a hold level here, a hold level is then going to basically try to hold the price sideways, or it's going to try and break whatever the downtrend is, which is basically this downtrend that's coming through here. So if it can get through that trend, then the reverse side of that trend can break the horizontal levels and so on and so forth. And really, you wouldn't have to consider any kind of major daily resistance under that 18039 level. Once you get to that, yeah, okay, you've got to get back into these ranges up above that were lost, and you can sort of see that when you lose an origin level like what happened up there, you can get these really big dips. And I know it sounds really weird to talk about that when we basically just say, hey, look, Trump sends a tweet and all this kind of stuff, but it's almost a little bit crazy that the chart just tells you that that can happen by the fact that you're just compressing down against a very polarized level. And then when you lose that polarized level, you get a big move. So we're looking for that to go up. We're looking for that to close over 16738. And if this is going to be, a bullish recovery, it's probably going to do that. Okay, so if we check it on the weekly, so the weekly is in an interesting position. It's bounced off the hold level down here, and this is not exactly the type of hold level we typically talk about in fib trading, but when this hold level was created, it was created by the close of this blue candle up here. So this entire string of yellow candles is a range, and this is the bottom hold. So although it looks like it was hit by this candle here, it's hit by a candle before the range is actually complete, which means it's not a hold level until here, which means it can still actually repeat this. So there's a little bit of, top secret alpha for you. When you're looking for fib trades, there are actually trades that exist in different situations, and I think I've vaguely said to people before, sometimes hold levels can be, used more than once, and that's true. And this is kind of one of those scenarios. So we've bounced off that hold level. We haven't actually lost these trends to the top side because we came from the upper side. So as long as the next week can then get back up over those 18, sort of that 18529 levels, then this can just become a deviation of trend and then continuation to the upside. So this level that's coming through here, and I should probably actually update this. I'll update this chart tomorrow with some of the new tools, but this level that's coming through here at 17770 is not actually a high time frame resistance level because it was broken without a rejection. And this level up here at 19012, that is technically becoming a higher time frame resistance level today. So basically, if we get above this trend in the next week and we bounce off the back of that trend, it would be a case of having to get our way through that 19012 on the weekly. And and by then maybe the weekly trends would shift. This could actually create just a little bit of a pullback over a week, and then that could shift the trends, and then it could go up from there. So but I think we'll redo that for tomorrow. And okay, let's have a look at the safety assets. Okay, so this has done what we wanted it to do. So we've not hard closed the break level. We've gone back below it. We've retested the range trends. We've not hard closed the range trends, so this is all good. If there's any hope for altcoins, it basically requires the next day to get down below these trends. And it can do that. It also hasn't hard closed the break level here at 65.68. There is a hold level there at 65.18, so you'd expect some kind of bounce off that. And it has hard closed that 65.2 something level, as well as that 65.44 range trend. So what you can do is you can get a move up from here. However, you could also get the next day coming down, and it may even try to do a prior trend retest. If it does that, it's a really good excuse for them to get it down below those levels. And if they keep it below those levels, then they can basically flip back into resistance, and then it can go down again. So I'd be a little bit careful just keeping an eye on this. If you're going to set any kind of alerts, you'd want to set them on the daily range trend that's running through here, which is basically 65.45. Because that is a hard close range trend, and that obviously created that massive bounce there. Must have been in combination with something else. So it actually looks like it probably started here. So tested, rejected, tested, tested, rejected, hard closed. That was your first sign that this thing was going to explode. All of this is just noise, and then boom. So yeah, it sort of started down there, but because it is now a hard close level, you'd want to keep an eye on that. Okay, let's have a look at the weekly. It's almost a full retracement. So this is what I'd refer to as a reverse trend dive. So it's kind of like a complete violation of all of the rules, and it needs to be corrected. And this is sort of what you see here. It went straight through a hold level here and here. It went straight through an origin resistance level here at 68.51, and it hit the trend. It grabs the liquidity from the trend, and then basically goes, whoopsie, we ignored all the rules, let's go back down. Now, the unfortunate thing about this is we still are up inside the weekly range trend. What you sort of need to see is you need to see it get down, and I think it's going to, yeah, it is probably going to move. It's going to erase effectively the interior trend today, which isn't overly good. You sort of want it to stay down there. There are a few more levels in here like that, which is not high time frame resistance. Let's see, that is. Yeah, so if it can stay under 66.3, and even if it pushes back up on the next candle and just hits that level would have the ability to break these trends. So and that downtrend won't be there anymore. So that can't be support. So yeah, still keeping an eye really on that 65 level. If it pushes back up into the 66s, and then does a little move up, and then it could actually push back down. All it actually takes to is 1 week of not being able to get back to that 68.49 level, and then that break level that's up there, so 68.47 level becomes resistance, higher time frame resistance. So yeah, that definitely has the potential to create a rejection and more downside, which would mean better flow into risk assets. But yeah, it could also stuff around for a week, zip up again, and then come down. So I guess the moral of the story is, if you've been following this long enough, is that you can't mortgage your house on one trade. And there's always the option for things to go two ways. So yeah, play safe. Okay, let's have a look at these totals. Okay, so so this is what we were talking about. We had a daily trend shift, and it was somewhere else. I don't think where it was. It would have been there, because that's causing a bit of resistance now. So this is kind of what I mean by sometimes, and we said this yesterday, we talked about it in the group, instead of trying to get back up through this trend, basically off very little, sometimes the easiest thing to do is to have this second down day, and then what happens is your trend shifts to the underside like that, and then you actually have support. So looking at it on the totals, it didn't quite come down and touch that support after the shift. But if you look at it on a lot of the individual tokens that had very similar structure to this, what you'll see is we had that little dip after daily open. Like say SOL as an example, we went down, we hit that 173 area, and then we went up. So basically the overall market is kind of playing out in a very similar way for altcoins. But each one of them will fare a little bit differently. And I do think, thesis-wise, one thing about what's just happened and where the money has been taken from is it may not actually rotate back into what got liquidated. So when that collateral, when a lot of that spot collateral and those unified accounts and those mixed asset accounts all got sold off on the spot market and created some illiquid altcoins nearly went to zero on some exchanges, I don't think people are going to then use that, because when the trades then got closed, it doesn't rebuy those altcoins. It basically pays out the trader in stables, right? So the question then is, what do they buy with the stables? And I don't think they're going to buy the old shitcoins. I think at the end of the day, it will probably flow into better things, and therefore, if there is going to be another pump, it might be quite selective on just some of the, I don't know, more desirable tokens that are more popular, and maybe those old ones just never recover. So just, I might be wrong about that, but just, if you're thinking about buying the ones that just took an absolute nosedive, if you haven't done it already, you may not want to do it, if I guess is the gist. And just be careful, do some TA on them. We looked at Zeus quite heavily yesterday, and it just didn't seem like, yeah, it could go up, but it had a lot of challenges, so I think that was in one of the discords, actually. Don't know if that was on the chat, but sorry, on the videos. But okay, so back to this. Really, it doesn't need to recover that old trend today. It'd be very bullish if it does. But overall, you sort of want to see this total market cap get back up into something like one of these ranges that's coming through here. And, that would mean sort of getting back up into that 1.6 level. It may sneak back up by the end of the day and get back into that 1.56, which is the backside of that range there. And then, as nuts as it sounds, if it gets back up into that level, it's almost like it never went down. It's just, it did go down, but it's like it didn't lose a range. If it gets back up into there, then it's just back up into the range that we've been trading in for, since August, effectively. So this could also just be seen as a test of the base of the range, the overall base of the range. And the outcome of that, if it's bullish, is all-time highs. If it's super bearish, is rejection basically now, and down. Or the medium cases, sometimes they retrace to about the 50% of the range and then down. So you're sort of looking for these types of things to happen, one of these to play out. But it's sort of why it's key to get good entries, because if you can get a really good entry based on a bit of TA, then you can already be taking just a bit off the table here, and then just wait to see what happens. But you're not in a really risky position. So okay, let's have a look at the weekly. Okay, so the weekly is back inside the range. That's actually an origin support there at that 1.51. So it was tested, it had the accumulation above, created a hold level, created a range trend. So there's actually probably another type of range trend that exists, which is this one running through here, which created that. We will do some kind of masterclass thing at some point, or maybe set up some kind of private group or something. Just mentioned it in the Discord and got a few responses from people saying that they might want to do that. So, but yeah, we'll look at doing something. But there's another type of range trend in here, which creates this bounce, and we've basically gone through the reverse trend, we've dived the range trend, we've dived the standard trend. All of that is liquidity sweep. This is what we were saying yesterday, that this is basically more like a liquidity sweep, and the proof is that does it go back up. So it's back inside this range. It's not lost these upside trends. It may create a hold level here if it doesn't close back up above the 1.58 area today, which could be why they're just really bullishly pushing right now. They maybe just want to not create this resistance. But if they do, you could get a rejection off that hold. You'd expect the rejection to maybe travel to the trend again, which would not be as low as what it went down yesterday. That's for sure. It'd be like a little sweep, maybe a half wick fill at most, and then back to the upside. So the real bullish case is it doesn't create a hold level, and if you want to be super bullish, next week it engulfs, and if it engulfs, well, it's going to fly, because then you could put a fib on this candle, and then you're going to retest these higher levels up here. So, but let's not get too ahead of ourselves. Okay, let's have a look at this from another direction. Cool. So if we consider it from a dollar strength perspective, we have not lost the range at all. Pretty much we just took all of the liquidity below it, which is really sad. At the end of the day, there was a lot of people that got wiped out in that, but that is literally what it's done from a strength perspective, is it's just swept that entire range. Now it's hit the reverse of the range trend here, which is basically why it's running into some resistance right now. For this to be really bullish on the daily, you'd want to see it get back up over that, close, pump, and that's very possible for this thing to pretty much be back up to the top of the range within 2 days, even if it really just closes in the right place, which is about that 361.2 level. Okay, same thing goes if we take all the stables out of the equation, we just purely look at risk assets, then we've regained the range trend, we've bounced, we're creating a hold level at 3.45, so structurally that is a point that we can ladder off. So even if we reject on something up here, there's another entry that you could potentially get when it comes down to here, or if it has to come down to there. Hold levels don't always get tested. Like sometimes they are left behind, like the ones that are at the bottom of ranges, which is this kind of thing. And there was your perfect entry if you just had the patience. And I know that sounds nasty because a lot of people lost, but when that got created in July, if you had put an order on the base of the overall daily range, it would have hit in October. And, you know, you would have got a major secret entry and everyone would have thought that you were an absolute genius. But when I first started out, these are the kind of things I was looking for, because there was always going to be some kind of bounce off them. It was the base of a range never ever breaks on the first touch. It always bounces. It just doesn't always recover. So what you could do is you could trade these back to the bottom of the range, close half the position, and then see what you got from there. You'd close another half at the midpoint of the range, and then if it took off to the top, you'd then be in a positional trade, and you'd keep that positional trade, or you'd add back in a bit to it when it not a lot, but you'd add back in maybe 10 or 20% of what you closed if it retested the top of the range and then went up, and then you'd basically repeat the cycle. So when the next range got created, you'd place your order on the base of the range again, and then if it came down and tested it, you'd be entering again. And that's very patient range trading in a nutshell. Okay, so on the weekly, the weekly looks like it's not going to create a hold level. So it's got back up above the overall global range trends. It's got resistance there at, level's that? It's got resistance there at 3.78T. So I mean, if it got back up over that before the end of the day, it'd be crazy. The level above that is just simply a break level. So that's 3.84 is not high time frame resistance in any way yet, but this is kind of how Head and Shoulders form, by the way, if you're into Head and Shoulders. So down, and then there's the head, and then down, and then guess what? You've got high time frame resistance lower than the head, and then if that rejects and breaks the bottom, then you can get your dip. But for now, if it closes where it's closing around that 3.61, then it will be in this little wedge here, and then really you just need to see it get back up over these levels in the next week. But yeah, that generally speaking, when they do liquidity sweeps like this, they don't sell it here. They want to go here. So that's most likely where they're going to head. And I think our main trends and everything are still up around that 4.6, 4.5, 4.6 area. So everything's kind of up in there with confluence. Okay, let's have a look at Bitcoin. Yep, so same thing. Daily trend bounced. This didn't actually really even have to move the daily trend. It was just already there. So it's bounced off that. It's created a hold level. So if it does do a flush, there's a level there to break the downtrend. So what you've got to do is you've actually got to basically break this, this downtrend, and we're still quite a way away from it. So, we could, based on the reclaim of the prior trend that's coming through here at about 114,300. So everything we sort of spoke about over the last couple of weeks has always been that 114,300 was kind of the high time frame confluence level. I'm sorry if anyone did just put their house on that, because seeing that coming was not something that I would have even expected. But it's interesting to see that the recovery has got us back up to that being just above that level. So from here, because there is a lot of high time frame support in there, recovering that level and then bouncing off that level could mean that we just go straight through all of this stuff. And the next real high time frame resistance is that 124.539 level, with a little bit of stuff in here at the 120s. So yeah, it really does look like, and I guess I'm skipping forward a bit here, but it really does look like, from what we looked at on the high time frame stuff previously, that this is actually trying to position itself to basically be in a key area to bounce up into a higher time frame. Okay, so that's what we can really tell from that. If you're just purely trading on the daily, then the 117,500 level is kind of that area of quite a bit of daily resistance through here. And if you were going to get some kind of head and shoulders thing, then it's going to come from there. And that would be then your pattern. And if it breaks the base of support, you get a big drop, because that is a very polarized level, and you'd get a big fall if you lost it. Okay, so yeah, if you're in a trade, maybe look to take some profits around there, and then see if it breaks the trend, see if it breaks down. The daily trend that it would have to lose is running through there at about 110, so daily close under that. And yeah, the one very dangerous thing about wicks like this is that they have two effects. One is that they generate all of these break levels to become high time frame support as long as price stays above them long enough. But the opposite side of that is that they clear all of the hold levels by dipping into all of those orders that were sitting in those levels outstanding. And if it comes back too fast, it means you don't have support. So we need to spend a couple of days or a week up above that level, and then this becomes a very, very strong base for Bitcoin. Okay, so that's why you often don't see more than half of a wick ever revisited, because you've just somewhere in that wick you're going to have some high time frame support from the left of the chart. Okay, so let's have a look at what else we got. 3-day. So 3-day, it would be nice if it just closed up a little bit more, like a little bit more, like another $1,500 over 116.5. Probably won't. It doesn't have to, at the end of the day, because it is there was a prior broken interior trend that was running through here, so that trend can act as support. So it doesn't have to go back up, but and this is solidifying that area at 124.539 as resistance. But for the same reason that pushing the price below high time frame support created a really big dump, if they push above high time frame resistance, it can create a really big pump. Okay, so that could be the blow off top level, and the targets would be some of these range trends up to the upside, and there's some pretty huge possibilities there. Could be anything in there, and I mean, that's the highest one you've got, 300. Oh geez, even higher. Well, we won't go up there. Let's not scroll up there. Okay. If it goes to 300, you heard it here first. Yeah, let's have a look at the 5-day. So 5 days back up above trend. It's bounced off the range trend. It hasn't got back above the break level. So there is this resistance at 119 at 811, but it was hard closed before the dip. Okay, so as long as it's back up there in the next 5 days, it's not really a problem. Okay. Okay, onto the 15-day. So this is where things get a little bit more interesting. So this 15-day one has a prior trend to retest. It's about the 130s. It could create a bullish hold level if it closes over 115978. So and that would also be back up inside the range trend. But either way, even a close here where it is back up inside the interior trend. So, and it doesn't need, it actually doesn't need to be up above this level to create a hold level here for a new range. What it can do is it can use the trend to bounce up and close the next 15 days higher than the wick of this candle, and then that basically can be a hold level, just in a sort of different structure. So there's a warning sign kind of on this time frame, and that's the fact that the prior accumulation was not able to get back to the top side resistance trend. So these are the signs of a blow off top. So, didn't manage to make it up there. Need to probably turn the dot off on that indicator so we can see the wick of that other thing. Let's see. Do I turn off that dot? Dot, go away. Yeah, so that didn't get back there previously. So these are the kind of things you're looking for dumps. There was your trend. That couldn't accumulate back to it. Created that new interior, which meant price was rolling over. That hits the interior, and then the down spiral starts. So yeah, we want to get back up over that, but I'd suggest that once you start getting into those 130s, like the retest of that prior trend, then if it does get up there, it's definitely an area for profit taking. Okay, let's have a look. What do we got? 19-day. So 19-day, if it just snuck up to 116 before close, it would be over the top of basically all of the resistance. But it doesn't really have to go up that high. It could 115 would be a very positive close, and it even looks like it wouldn't really even have to be that high. For that candle to open on the other side of that trend, really only needs to be in the high 114s. So then it could be on top of the range trend and then create another bounce. This level up here is, at this stage, this level is just a break level on this time frame. So you wouldn't expect a huge rejection off it based on the 19-day, but it is a level that could create the rejection based on those previous timeframes we were looking at. Okay, 57-day. I wouldn't worry too much about this one because that's not a full candle, so let's skip that. Weeklies. So they've pushed the price up enough not to create a hold level. So that's what we were looking at yesterday, is that we just really wanted them to take it back above that 112 level. They've done that. They haven't gone above the break level or that break level, but they also haven't converted them into weekly resistance. So at this stage, they are daily or less than daily resistance, which is good because the bear market in 2021 was created by a level like this that became weekly. So it's good that it's not weekly. And yeah, it's closing over the top of the interior trend. It's still got a range trend it's got to get back through. But yeah, it would be nice to see it just get up a little bit more before the end of the day, but to be fair, it doesn't have to. So yeah. Okay. And then we have the 2 week. So if they push this thing up before the end of the day, above 115.222.6, it'll create a 2 week hold. It's already above the 2 week interior trend. It's kind of just on the fence with the uptrend. And basically, that isn't such a good position to break to the upside. But yeah, it needs to, it looks like it's retested most of these levels too. So it's retested. Yeah, so all this stuff's retested. So that's probably why the lines have disappeared off the chart. Yeah, if we can get a close over 115.222, it should be pretty good. And you'd expect it to get back to that, the high 120s. Retest the backside of the trend at 130s. Okay. 4 week. Okay, so the important thing for the 4 week is that it held the range trend. But this is the first time frame that is saying, so you know how I mentioned there are some things that said that we might get that little bit of a flush, or we could get a flush after we close. So we're back up inside the range trend, but we are still, we've still got that 4 week hold level sitting there. We haven't really closed up above that hold level. What might, and we are breaking the interior support trend. So this is where the trend actually shifts to this point. Now, much like when we shifted the daily and we bounced off the daily, this is a pretty high time frame. It could trigger a move back to just take out that liquidity of the chasers and then pull back up again. So that would be the one time frame that I'm looking at thinking, okay, well, it's in a really good position for a close because it's back up above all the supports, but it is technically making a break today. And like I said with the daily, it is easier to shift a trend to the underside and bounce off it than it is to actually try to break through it. So you could be bullish on this, from the perspective of if it shifts that trend and bounces off it, it's because it wanted it out of the way to go higher. And you could be bearish on this because you've just opened a position at 114k and maybe it flushes that liquidity either to the range trend at about, wouldn't be that bad at like 112 or down to the new trend at 105 again, which I think would just scare the bejesus out of everybody after what's just happened. Okay, what else? 5 week. Yeah, and then the 5 week is looking very bullish. So it pretty much only has to close above 114.151 and it's got a hold level. If it can be really cheeky and push up to 115 or just above 115, then it has a hold level and it's above the trend, and that's really good if it wants to push up. 8 week doesn't really tell us too much, other than we do have a range trend coming through here. We have a main trend. Again, 115s. If BTC can close the 115s, then boom, off it goes. But it's not really telling us too much outside of that. And it is kind of going to open, well, it could open on the trend, have a bounce. It is technically under the main resistance trend. It's got this really juicy range trend that's never been retested, and it's April, June, August, October, December. Fake candle is that one. So that's a really interesting looking parallel channel. there's your 50%. So I think if it gets up over that, 160s, maybe. Okay, and the monthly, etc. we won't go into, but as you can see, really this entire thing was just that monthly retest happening. Scary as it sounds. Okay, let's have a look at SOL. So SOL on the daily, hold level, it's hit that resistance. So we move the trend, we long the trend, we TP'd at the first resistance, we wait. Okay, so that was the trade. That was what was basically spoken about as one of the possibilities. Really, the two possibilities were that we were either going to bounce off that new trend, or we were going to sweep to one of these high. Well, could be like it could have gone to that 160 level, which was the high time frame support generated by the close being up at this height. So I think because that level was touching. So it was that level, 161. So the trade I took yesterday was basically trend to there, which is TP, whilst preparing for this video and making this video. And the other option, and where I was prepared to add, was basically if it pushed below the trend for today, I would have cut it and I would have moved the order back down to here, and then I would have taken it back up to the trend. So, but it's run off that top level and gone up. So as long as we close above this sort of 190 area, then we're back inside the range. We're creating a hold level. If we come down and bounce off this hold level, we're probably going to try and test something up here. We could test the range trend again in the 180s and then travel up to the next range trend. Unfortunately, we could test the range trend in the 200s, like 210, that sort of area, and then travel back to the 180s. That is also possible, so just bear that in mind. Ideally, we need to get back up above this 196.662 for close. If we can do that in the next 2 hours, then that is getting back up inside the high time frame support range, which created this move from here, from that 196 up to the 238 previously. So yeah, getting back inside that would be quite positive. Staying under that isn't that positive, to be honest, for the daily. It might mean that you then just get a rejection off the backside of it and come back down. But looking at that liquidity, a lot of people have chased this pump. It really wouldn't surprise me if they do come down and sweep this trend down to the daily high time frame support at 161 and then travel back up. Wouldn't surprise me. Markets can be brutal. Okay, so looking at the 3-day. 3-day's in a pretty good spot. It's back up above the interior downtrend. It's back up above one of the interiors. It's breaking the top interior. So it is still below the 3-day range, which would require it to basically get above, what's that, 197.872. But the 3-day resistance, not technically hard closed yet, but the most important level on the 3-day to get above is actually 200.040. And we want to be back up above there in the next 3 days, because if it creates a downside candle and hard closes that, then you'll reject off the backside of that, and then you'll get some more downside. So that's where that needs to be. So looking at the 5-day, oh boy, and President Trump says tariffs are still the plan for China November 1st. Oh boy, I guess we might get that market crash on Monday. Oh, that's a big sigh, by the way. I just wish for a minute we didn't have to look at tweets. Big sigh. Anyway, going back up on the 5-day, it's basically got 5 days to get back up above what level's that? 205. So when you sort of consider these time frames and these levels, more time, it needs to go up. So basically what we're saying is that we just need to keep trending up. If we keep trending up, our trend escalates in its strength of time, and then that just allows it to, move higher, basically. 15-day, I mean, the 15-day hasn't actually even lost its range, so really doesn't mean anything. It had to break below 125 for the 15-day to lose its range. What is interesting is just things like, these fib shorts, which that was created on the 31st of January. We entered the danger zone on the 15th of July, and the target has now been hit on the 28th of September. So, if you're, for those of you out there that, are looking at really high time frame fib trading, it's kind of just another example of how far things can swing and how far they can move. And in this instance, it actually pretty much hit the break level, created a downtrend, then rejected off the downtrend to travel to the target. So that was months that went by before that thing actually completed. And I don't mean to be a complete scaremonger, but there are still ones of these to go to things like 123. And if you look at this time frame that we're on here now, the actual origin support for this time frame is this level here at 118. So you could actually go to 123 and still be just in this range. So it's kind of pretty scary when you look at the high time frame stuff. It's also why in a lot of cases it's just the the longer you leave some of these positions open, and the more the liquidity builds up, below you in your longs or above you in your shorts, the more likely you are for some move like this to trigger and send the price down. And all that really was a shift of trend to the upside, a close below it, a retest of it, and then a dump all the way down to that, the support trend, the main support trend. It just cut through all the interiors and dumped. So yeah, some of these things can take a while to play out, and I'm trying to think of a way that we can basically have all of this stuff, and I'm working with people at the moment so that we can hopefully have some systems. They can't be free systems because these people need to be paid, but I'm effectively all of the IP and all the stuff that I know about this and structure and how things move is getting built into systems that hopefully will be able to tell people, hey, this is about this is a level that is going to have these possibilities. And it might mean that you don't necessarily close your trade, because there might be another thing that says it goes up, but you would at least have an idea of what the range of price could be at any given moment based on structural events. And it might make the difference between you hedging or closing some or taking some profits or changing your liquidation levels or whatever, and then not getting caught out by something like this, which literally is a 15-day trend rejection back to trend support, and completion of a fib move that's been outstanding for months. And all it really had is it had two reasons to do it now. And then, tweets and macro and all that kind of stuff. It's just kind of crazy that it happens, but it's all kind of there waiting to play out. So you reject a trend, you travel to a hold, and that's all that really did. Was it rejected a trend, traveled to a hold, rejected a trend, created a hold. So when you consider just this one thing in front of you, you had a fib move that said price was going to go down to a minimum target of 150. It's been outstanding for a while. You created a trend, you shifted from support to resistance based on a trend break, so that's that dot to that dot, it moved. You closed under it, you created a hold. This hold is going to target these trends, any one of these trends. generally speaking, it's only going to target the first one. But the problem is this trend is going to target this hold. So this wants to go here. This is happy to go here, here, or here. Well, this has confluence with this. And that's why I kind of feel a bit shitty, really, that I can't watch every single time frame all the time. But if we can build some stuff that actually lets these things alert people of when this kind of stuff can happen, then, you know, maybe we can have a Discord full of traders that just never ever get wiped out. So yeah, that's our 15-day. Okay, so let's have a look at the 19. And this is where it gets a little bit bearish, because the 19-day is creating a hold level, and it's already technically under the trend. That hold level's been tested. This hold level's been tested, but it's been tested with a yellow closed candle, which means it didn't create a range trend. Typically, when you have a hold level like this, which is at 127, if you revisit it with a blue candle to create a range trend, you will revisit it below the wick of the yellow, which is 125. Now we have all of those time frames still pointing to 123. I don't know about this one. Let's have a look. Guess what? 123 is that whole candle there. Revisited here. Hold level here. So if they do sweep Bitcoin again, you can see where this could go. And it would be entirely structurally reasonable. And it doesn't even actually break the bottom of the range, because the bottom of the range is 120.646, doesn't break the bottom of the range. The base of the range is this level here at 101. This was the retest of the base. The retest of the base has not achieved a higher high yet. And so it is entirely possible that this could reject. And the trend might save it. So that could be like another 149 visit. The hold probably won't save it. There will be a range trend in here at about 135 that could save it. How does that work? That can't be right. No, 144, sorry. 144 that could save it. But it may also just simply go to that 123 completion of the fib trade. In doing so, create some kind of hold, some kind of range trend on the close of the candle, and then bounce the range trend to continue to the upside and, you know, try to break out. Okay, so what this also says is that once it goes above this trend that's running through here, about 207, you just want to be really careful to see if it does, you know, roll over from that 207 price, because much like you just saw on the prior time frame, the structure is basically identical, apart from the fact it's already tested the old level, so it's more dangerous, right? So could go to that lower one. Right, so there's our bearish. Be careful, be careful, be careful. As far as the top of this range is 264. So if it can close up above 204 by the end of the day, awesome, doesn't create the hold level. If it can get back above the trend by the end of the day, above 208, amazing. But yeah, it is possibly looking at a repeat. Okay, 57-day. And this is where it gets really confusing. 57 days above the support trend. It's hit its break level. Really, it needed to close over 204.636 to be like properly bullish. So it does sort of bother me a little bit that this thing is actually below that level. It's not hard closed it. The trend is, you know, in the 180s, but as you know, we can dive. The trend, the actual trend from back here, the original trend for the entire chart, will shift to the top side to create new resistance at 253. And this is the hard close of that trend and that trend shift. So the scope here is that it could push up to 204, you know, or anything above 204, and then it could reject off the horizontal level to retest the underside trend, which is going to be about that 161 level. And that's got confluence with the level that they flipped into daily support. So, you know, do we push up a little bit more and then, you know, maybe we get another tweet, or that tweet that Trump just sent that basically said, hey, tariffs are still on. You know, does that then open the markets, the major TradFi markets, and then basically cause a sweep of the TradFi markets and another dump in crypto? Because hell, why not just dump crypto some more? So that is also possible. The most bullish area that this could bounce from is like the 180s if it bounces off the uptrend. But yeah, we already closed over that uptrend, as you can see, and look how deep it did dive. It went all the way down to the hold level. So yeah, unfortunately, you know, when you look at ranges like this and the time frame they're on, they are actually still bullish unless you actually get a high time frame close below 109. So, you know, it's hard to say you're in a bear market when you've got such a wide price range on some of these high time frame moves. But that is what it is. Okay, looking at the 95D. So the 95D could basically bounce anywhere from 189 or down and travel to, you know, 228, or depending on what it's actually bouncing off, because you've got the backside candle here from April, which is actually probably what caused that all-time high. But so it's more fair to say that it's actually probably this candle, in which case, you know, hey, it could bounce off 189, it could bounce off 172, it could revisit, you know, the primary trend 161, 162, and then travel all the way up to 237 again. And 237 is the weekly resistance, so 237.5. So, you know, there's a move that could just play out in that area, where you might get up to that 237, but you could also retrace back into these levels first. Okay. Weekly. So the weekly is not ideal. It really needs to be back up above 204 or 210 to close up inside there. It has got back up above a lot of price support. It's back up into the range at the top. But really the key levels is that 204 level, which is kind of like your 2021. So yeah, 204.636. So as far as could it get back up there next week? Yes. Could it then bounce off that and then continue to travel up? Yes. It hasn't really lost any of the weekly trends. When it shifted that weekly through there, pretty much all it did was fail to get over it, failed to accumulate back to it, hit it, dump. You know, so that's that kind of top formation. It also created that downwards range trend. first touch of the range trend did not have a hold level to actually break the trend. So once it hit it, it really was just going to go down. Unfortunately, the first available untouched hold level on the weekly was that 153 level. Even I'll admit, I did not think that we were going to go back to that level because we had too much other stuff in between to support the price, but I guess there it is. And there is the range trend. That was a hard close range trend, and it even went all the way back and actually retested that range trend. So yeah, where it's at now, there is another range trend actually just in here. So it's looking to close above that. In theory, if it bounces that, it should try to attack the hold. That gets you to that 2.0. So if it goes off the wick, which is really bearish if it bounces off the wick and comes down to break, but that does get you back to sort of like that 203, 204 through to the body of the hold, which is a bit more greedy, and that's 210. And yeah, or if it goes to the opposite range trend, then you're back up to that 227 area. So it has the ability to move up from here, but certainly it doesn't look as bullish as what BTC is doing. BTC looks like it is trying not to create resistance, whereas this looks like it's a bit more blasé and not terribly worried about creating resistance. But I think it changes a bit when we get to some of the higher time frames. So one of the key levels on the 2-week is that 188, and we're above it. So, the 1 week looks bearish. The 2-week actually looks a little bit more bullish, and that could also just add to the fact that maybe they're going to do that second little dip before they do the pump. But really, it's 2-week looks a bit more bullish. The resistance for the 2-week is all the way up in the 250s. That's got confluence with where we're shifting some of those high time frame trends again. There's that 253 area. So yeah, this may push all the way back up to there. It'll also be the new break level for the range if we have an upwards week. So and advice just simply would be, like it always is, TP into break levels because you don't know which one is going to convert to an origin level. And worst case scenario, they are just about always retested, even if you have to wait patiently. You just saw the 102 level get retested on BTC, and it's no secret if you've been in the groups, etc. When did I sell all of my BTC spot? I sold it when we started to go past about 108. So basically 108 through to about 114, 115, I unloaded everything. And then we had this dip and I did a big buy and then resold it again and etc. I've done a couple of spot trades on BTC, but then if I had never entered BTC again and just put an order on the monthly break for the retest, that would have hit at 102 in the last couple of days. So the same thing applies. Like if the price gets up here and starts hitting these 250 levels, these weekly or 2-weekly break levels, so it's 264, I'd be very interested in what will happen when you hit 264 if it hits that, because that is a origin resistance level, so that could really dump the price. So if price gets to these levels, just if you've got FOMO about missing out on a higher level, then just take half off the table, and because you'll be so happy if that becomes the top. Put it that way. One of these levels will become the top. So looking at the 4-week, so hence there's your perfect move. That was the origin resistance level. We hit it. We went straight down to the trend support. So there's your 253 down to your 142. Now, I think personally this is quite a bullish close because it hasn't created a hold level as long as it closes up here. And as you can see, it's trying to sneak up above the trend, which means it may bounce off the backside of that trend and then target. Getting lots of alerts. Where's that? No, it's bouncing again. Oh, look, 115s. Yeah, it really does look like now that they've robbed 19 billion out of the longs, they're going to want to push it up. Probably don't have to be a TA genius to see that that's a high possibility. So yeah, it looks like we're going to open probably on the top side of this trend, could bounce back up to retest the prior trend. If it pushes through that, it could even engulf the candle. This is a 4-week time frame. You may bounce off that, continue higher, but one way or another, when it hits, in this case, where is your break level? It's 253 again. Definitely consider taking something at 253. Definitely consider taking something in that 264 area, 264, 265 if it gets there. And then the next break level is, of course, all-time high at 295. So you're better off to be TPing at these high time frame levels than not. Even if the price ends up going through them, and you can hate me later, but if it actually ends up rejecting and then, or even if it goes up above it for a while, rejects, and you miss that, and then you really start to go, oh, geez, we're back below 295, we're back below 253. At least you took something off the table early. So just, yep. End rant. 5-week, creating a range trend. It's not really doing too much. It's, what is that? It 246 might be problematic. I wouldn't be too worried on this time frame about 228. Still hasn't got above that trend though, so that's a problem. So that's a 205 rejection. The hold level's already tested, so the next area would be the new range trend. Back to 150. It's not. I suppose it could retest the broken trend again, 179. Yeah, so this time frame is saying that maybe it does a bit of a push up and then it could do a bounce down. So it could be a little bit bearish for SOL. But I think that would just be another sweep just to take out. If they do another sweep, but it's not to a lower low, it's really just to take out the chasers, the people who have chased the pump. Okay, 8-week. So break level for the 8-week is all the way up there at, what's that, 247 again? So that's a bit more confluence. So this is I'm still investigating these types of break levels for the tools that are being made. So this is an in-range tested origin level. I need to find more instances of these to backtest because the hold level technically isn't tested or testable until the range is created. The question is an origin level testable before the range is actually created? So yeah, 247 may be just a break level. It could be an origin level, and you may want to take some profit off the table at 247 if it gets up there, and just wait and see how it reacts. The other level here, once again, is just that 204 636 level. So before you can even consider these higher levels, it's really got to get past that 204 level. The other thing that will happen if this closes up today is the main trend will shift to the top side again, and that's a 253 sort of rejection. And the scary thing is there is no hold, so that's, that could be problematic. So, and the base of the range is 120, so where's the other trend? 123. Eek. Don't like it when there's support at 123 on timeframes that could reject, because we are technically going to open on the wrong side of the interior So the biggest dump that could actually come about from this would be a move to 204, a rejection of the not hard closed break level from the wrong side of the interior trend when the hold level is already tested. It's tested before range creation, so it might support it again. The trend could act as support, but you've also got this untested trend waiting to be retested at 123, and you've got a lot of time frames that simply have a fib trade that go to 123. So that's, yeah, let's stop there. What else we got? Okay, well, this is creating a hold level 175 to 206. So that means do you get a little pullback and then a move up and then a move back, maybe? So trend support here is about 144. We're going to move resistance to the top side, 253. So yeah, 175 to 206 could be a range. It is a front side hold, so yeah, that it's the highest risk sort of trade you can take from a fib perspective, but it's not really any different to this one. So that was a move from 184 to 231, which then ended up going higher because they can. So yeah, you might get something, but but really you've got to be aware that 123 is a real number and it's possible. So I just don't think it'd happen, but hey, we also didn't think we'd see 140s. Right. And just for giggles, if it does close over 213 today, yay, 286. But this is actually above its break level. Unfortunately, it's not a hard close of its break level. That would have been absolutely the most bullish thing known to man if this thing could have hard closed the old January break level. But it is above its trend, so the next candle could bounce off 187-ish area, 187, 189, somewhere in that area. It could bounce off that trend and just go. So this is so that other type of hold level that we spoke about briefly, where it's not an actual engulfment, how it gets created is because of a trend. So if this next candle hits the trend, goes up and closes up, fully engulfing that blue candle there from January 6th, then that becomes a hold level to that next 20-week range. So that's sort of how that thing can happen. But yeah, okay. I think that's us. Just have a quick look at Tesla. Market's been closed, so it probably hasn't changed. Yeah, it's still just sitting there. So yeah, if the market's open bearish today on Tesla, just to reiterate, I'd say that you're going to come down and easily see, these 394 or lower levels. If somehow they manage to orchestrate a ginormous sell-off in the TradFi markets to mirror what happened with crypto, then you will see 258, or something down sort of around that 258, or this level down here is basically the equivalent to what we just hit on SOL. So yeah, if you were looking to get into it, you could ladder buys basically. Like if we're talking long term, if you're looking long term, you could ladder buys each one being a bigger size as you go down. So just take however much you want to actually invest in Tesla, and basically ladder the buys from the backside of the range trend here being your smallest buy at about 394, and then take these 367s and just average it, sort of take the next portion, average it between sort of 367 and 354, and then take the next portion and average it between 338 and 325, and then basically under 300 down to 260 for the rest. And you never know, you might wake up, markets might open, and you might have just got yourself a really, really, really good Tesla entry. So, and that would, narrative to follow. There'll be something, I'm sure, that will come out that basically allows people to justify what happened. But I'd look at that at the moment. And just from a bullish perspective, you've got I think it's a 1 month trend that it's rejecting off, which is, by the way, just exactly what you've seen in crypto. It's the 1 month trend, and that's about that 440 area. So it's really got to get back over that, and it could go up, but at this stage it's, and it's sort of actually, from a weekly perspective, this level right here at 427, so that was a origin rejection level, and it got hard closed, although candle displacements and stuff make it very hard to be precise with stocks. But let's just hypothetically say that is a proper hard close of that level. Whatever it does next is a sweep. If it does a big huge dump and then back up again, it is a sweep, because it's already hard closed the top of the range to break out, assuming that is what that is. And you've got trend compression, you've got all the signs of a rejection in here, but then you've got a sign of it's going to go higher. So whatever comes next is a sweep. And a lot of people are really bullish on Tesla, and there's, let's just say that the entire big institution part of finance has just suddenly decided they want a position. Well, they're not going to buy here, but they're going to find a way to dump the hell out of this thing and then send it back up to these upper levels afterwards. And just if markets just open to a bloodbath, that's where that could go, and that's what that could do. Failing that, it's basically in a weekly downtrend, starting, assuming this is actually the high, but it's slightly lower. So really, you got to see it get above, what is that, 488-ish. Once it's above 488, then it's just continuation. Maybe it pulls back to 334, which is about half the range. But yeah, it's that's pretty much all I can see on there. If you really want me to dig deep into Tesla, let me know, but it's quite hard to get exact levels on non-24-hour markets with huge displacements and structure. So it's they're always going to be sort of more vague chances. I think that's about it. Yeah, that's it. Okay, so that is, wow, an hour and 30. That is a lot of my life. It takes about 2 hours to put one of these things together, and then about an hour and 30 to record it. Then I'll have to do the timestamps because I forgot to do some of them along the way. So like, subscribe. Even if you don't like it, please just like it, because it helps the whole thing get out there. And and let me know in the group if you want me to set up some kind of private group, and if so, what would you want me to put in it? And yeah, at the moment it is pumping. It looks like what do we got, an hour to go? Here's something. Oh yeah, an hour and 44 minutes to go, and pushing back up into the origin range on SOL. Yeah, I mean, it looks, everything at the moment, unless they change drastically by the end of the day, everything looks like it is a big liquidity sweep and reclaim of structure, which is very bullish, probably also quite sickening for all the people that got wiped out in that dip. So, all right, it's not a very nice note to end this on, but I hope everyone survived, and we'll catch you again on the next one.